It's April. The University of Connecticut are the national champions, and we have a real estate market update for you here in Austin. I'm David Shapiro with my colleague Lee Abraham. If you think it's a buyer's market, we're going to show you the stats and answer that question for you. So let's dive right in. So here we have the number of active listings, and you can see if we look back to the beginning of last year, this is during the super hot seller's market. And as interest rates rose, so did the number of active listings, and that peaked in October of last year at 2,600, and now it started to come down as activity picked up, and with normal seasonality, listings go up. So here in April, it's up to 1,900, and that's just normal seasonality. And we're actually, historically, the number of active listings on the market right now is still low.
So here you have the 1,945 active listings, and we break it down based on the number of sales per month, looking at some different metrics. So over the past year, we averaged 724 sales a month. That equals a monthly housing inventory of 2.69 months. Then you can look at some of the other statistics, the number of sales over the past 3 months, 546 sales. Over the past 1 month of closed sales, 660 days. Those translated to about 3.5 months, 3 months housing inventory, but we've been looking at the pending sales, David, which is really the leading indicator, very robust compared to the historical data. 876 pending sales over the past 30 days. That translates to that 2.2 month inventory, which is a strong seller's market.
So here we have that 30-day monthly housing inventory based on actual closed sales.
Right.
And you can see how it picked up into the fall of last year. It peaked just under 5 months of inventory.
Right.
Generally, they say like 6 months is a balanced market. So we were getting pretty close to being balanced, not buyers. Buyer's market would be beyond that.
Right.
And then it started to come back down here in the spring, combination of just seasonality. There was a little bit of a change in interest rates, and the market's changing so fast, it's kind of like on a week-by-week basis with interest rates and things going on in the macro economy. You really need to check in with your real estate team, so reach out to us when you're thinking about it, because we are updating this weekly with clients. That changes the strategy and what we're doing, whether it's on the sell side or on the buy side.
Yeah, and based on the pending sales, we'll see this number continue to drop certainly into next month. So here you have the number of sales per month down year over year. That's to be expected. And of course, up month over month, which was to be expected as well. That's going to be the general theme with the data that we're presenting today, is a lot of these stats are showing us a continuance of the trends that have been unfolding over the past quarter.
Yeah, I think this has been the most consistent of the stats, is that for the last year, coming up on a year now, that transactions have been down pretty significantly. There's just less people buying, but there's still 70% of the people buying, right? So only 30% are not buying. So there's still a majority of people out there buying. That changed in December. We were down like December and November. It was almost 50% or so in those months. So that was the first time that it was actually the majority weren't buying. But here we go, spring, seasonality, people are out there still buying because people have life events.
Right.
So it's not like they can just stop buying altogether. People are getting married, growing families, getting divorced, they need to sell, they get a job somewhere else. And those are the types of things that are forcing people and they have to move. So those transactions are still happening. Then the opportunistic buyers are the ones that are standing on the sidelines waiting for interest rates to drop. And if you've watched any of our previous videos, you know how we feel about waiting for interest rates to drop, and we'll talk more about that here coming up. So now we have the average sales price, which in December was down 5%, January was up 5%, so we've kind of been hovering around neutral, and here we're down 10%. So we've got some bigger comps coming up. So if you look at these numbers going into the early summer, we peak at $912,000 in May. So we might see some bigger percentage drops if prices only seasonally go up a little bit from here based on the big jumps we had last May. So we'll see what this goes to, this negative 10%, but I won't be surprised if it drops even a little bit further.
As we unpack this changing market, there's different ways to measure these statistics, and when you're looking at this sort of a variance year over year, month to month, those are metrics that are commonly understood. However, psychologically, I think people are gravitating towards the peak number, which is the May number from last year, and going forward, how does the current number relate to that particular month. So that's a peak to current metric, which we really haven't been tracking yet, but we'll probably start. And then also going back 2 years, take a look at the numbers in 2020. An average of 550,000, well, that's really a more reliable indicator of what's been happening in the market as opposed to the peak to current metric that I was just talking about. A lot of ways to play the numbers. And what we're looking at here is essentially saying, yeah, it's slower than it was last year. That's being reflected in the prices. Doesn't mean that your specific home has gone up 10% or down 5%. It's a market indicator. And as David mentioned, hyperlocal, very specific details that need to be looked at for any particular property.
Yeah, and if the average person buys every 7 to 10 years, then you can go back 2 years and somebody's already has equity.
Correct.
So the majority of people out there have a significant amount of equity in their home, so it's not an issue. Even somebody bought at the peak. I was just talking to somebody. They're like, "Oh yeah, I bought at the peak. But we got a really great interest rate." And so they're locked in at 3%, and their payment is probably roughly the same as if they had bought a couple months later when prices started to come down. So they're not in a bad situation, and our forecast is it's not going to be too long before we're back at all-time highs for prices. And that might be 2 years, but it's still, in the big scheme of things with real estate, it's not a long period.
Days to sell, wow. Look at what's going on there. 17 days in 2021 and 2022, up to 60, but hey, the good news is it's down from last month, consistent with the numbers from January, and pretty much in line with what we've been forecasting for this first quarter. Be interesting to see what happens in the second quarter. It's really going to be telling April through June of where that number winds up.
Yeah, and this for sellers is just, hey, we're going to have to wait longer for the home to sell. It doesn't mean it's not going to sell. It's just going to take a little bit longer for the right buyer to come around.
You've got to set the right expectations. Won't sell at the first open house on that first weekend.
Right.
Guaranteed.
And again, this is average, and every neighborhood is a little bit different.
Right.
So your neighborhood, it might be 90 days. Maybe it's 30 days. So that's where talking to us so we can hone in and show you what the actual data hyper-local for your neighborhood is. Number of new listings up 6% year over year and up 70% month over month. So you can see it's pretty normal from February to March there to be a really big jump in the number of listings. This is a number of reasons, but mostly I would say that people are conditioned to want to sell their home in the spring, March, April, May, knowing that they're going to get the most money and there's the most buyers looking. And so that's the way the market has functioned, and you can see that playing out right here. And this is good to see more listings than last year and roughly the same as 2021, but we still have less listings coming on the market than 2018. It's still, there's not that many homes out there. And this comes to that seller's market versus buyer's market. And we've heard lots of stories of buyers saying, you know what? I want to find a different home, thinking, man, it's a buyer's market, interest rates are high, I'm going to have an easy time finding the right home. But there's really just not a lot of options out there. And so still having a little bit of a hard time finding the right home out there because of the limited inventory.
One of the things that's going to keep that inventory down is folks who did purchase over the past couple of years not wanting to give up that low interest rate. It's going to keep folks staying at home.
We've had some success with buyers. We have a buyer that went under contract just a couple days ago. We found an off-market property for them through our network of agents and sellers, and they're under contract. They're super excited. It was in a neighborhood that had really low inventory, and that several homes that they were interested in went to multiple offers. And so here they got an off-market property, and they didn't have to compete, so they're very excited about it. It's a great build. It's actually, of the homes they saw and made offers on, it's their favorite. So it worked out really well for them. And so the idea is get in touch with your agent, see what else is going on. Because in this market, more than a year ago, when the market was super hot, everybody was listing on the MLS because that's how you got the most money. But now, sellers are willing to show stuff off market and make deals. We have a lot of people that are buying properties that have never seen the MLS. And so I think it's really important that if you're thinking about it, you're entertaining it, is get in touch with us so we can start the process and show you what's available in this hidden market that you're not seeing when you're just searching around on Zillow.
The shadow inventory.
Yes.
So take a look at the expired listings, David, down just slightly year over year, 5.5%, up month over month, just under 20%. I don't see anything too interesting here or anything out of the patterns that we've been seeing.
Yeah, we started tracking this several months back just to see if higher interest rates and everything going on in the macro market would really impact the number of expired listings, meaning sellers that weren't able to sell their home during the period that they agreed to with their real estate agent, which is generally their 6 months or a year. And we haven't seen any meaningful change. So
No.
This is, again, still a non-story here in the expired listing department.
Right, and this would be one of the statistics that if we were in a rapidly declining market where you've got fear and abundance, where you've got blood in the streets, that type of thing, the expired listings would be way up and some of these other numbers we'd be commenting differently. That's not the case in the Austin market right now. In alignment with that, the sale price list price ratio, perhaps the ultimate measure of market sentiment. The voodoo number, we call it, compare it to last year where everything on average was selling about 7% over list. Here, just under 3% under list. It's a healthy number. 97% of the list price is a historically strong anecdotal number for demand.
And now for our proprietary listing inventory barometer. This is the most real-time stat we've seen for tracking what's going on in the market. So we're looking at the number of new listings compared to the number of pending sales. And so this 100% line here is what you want to pay attention to. So if this bar is below that line, that means there are more sales than there were listings. And if it's above that line, that means there's more listings. So the inventory is growing.
Right.
And the trend was pretty consistent for this period you can see here. And then in November, we had our first time in weeks, months actually,
Right.
that the number of sales outpaced the number of new listings.
Right.
And then we had that for a month and a half, that it was more sales, and then now that is reversed, and now we have inventory building again.
And as we look at this bar chart, if we had a straight progression moving in an upward direction, we'd have the strength of a trend. However, you can see those numbers vacillating up and down a little bit over the past 3 weeks. These are weekly measures. So that's basically telling me that we have a sort of a balance right now with demand going up, supply going up. Inventory is growing slowly based on the actual number of listings, but not the monthly housing inventory. So a lot of stability, David. A lot of stability is what this is showing me.
So that wraps up talking about the city. So now we're going to talk about everything happening outside the city limits, but within the metro area. So the suburbs, both to the north, south, west.
Right.
So this is, we like separating them out so that way it gives you a clearer picture of what's happening in the city versus the suburbs versus blending them both together into just a metro area report.
And on that note, just to point it out, these are single family homes. We're not including mobile homes. We're not including townhouses, trying to keep the data as clean as possible.
So here we have the monthly housing inventory. So same formula as before. You can see there's significantly more listings in the suburbs than there are within the city. And our monthly housing inventory isn't that far off. It's about a half month higher. So taking a little bit longer for things to sell outside the city limits than within the city limits, which comes back to a principle of mine, which has always been buy in the best neighborhoods, because you tend to see that the best neighborhoods not only perform better during the good times, but they also perform better during the bad times. So, and that's, I say, not that Austin in general, every part of Austin is better, but when people are thinking about moving to Central Texas and to Austin, they know Austin. They haven't heard of a lot of the suburbs, and then they are like, oh, okay, well, this place is a little bit less expensive, it has good schools, and it's not that far from work, so I'm going to move to Round Rock or Leander or whatever the town is that they decide to move to.
I'd like to point out, to me, the thing that's the most interesting data point on this particular chart is those pending sales once again. Over 2,200 pending sales the past 30 days. That exceeds all of the other metrics. The average for the 12 months, 3 months, 1 month. It's a strong indication of demand, and the trick now is how does that interact with supply, and that's where we begin to parse away some of these details. So sales are down year over year. We knew that. Up month over month. Basically the same pattern as inside the city.
Down 11%, pretty similar to the 10% that we saw in the city, although the number itself at 485 is a lot different than the 776, but similar progression here that we're going to be seeing.
Days on market, once again, a big, scary jump, 247%. That's a ton. and up month over month as opposed to what we saw in town. So this is really a red flag. It's not at a critical point yet because of the increase in demand, the more modest increase in the number of listings that we'll see. But you get closer to 90, 100 days on market, and then that begins to put some downward pressure on pricing. And we'll keep an eye on this as the second quarter presents itself to us.
Yeah, because what you're pointing out here, Lee, is 73 days here isn't all that much different than 70 days in 2019. So we're not that far outside of historical norms.
Correct.
Yeah. Number of new listings, similar story, up. It's what we want to be seeing, although this is up more than any previous year. So that's interesting to see at 3,100. I don't see that prior to all the way going back to 2018, 2022, 2021. But like if you go back to previous years, 2020 and prior, there's no 3,100 listings coming on the market. So this
pace of development.
There's definitely more development in the suburbs than there is in the city. Yeah. So that's part of it.
Well, we know that 3 of the fastest growing metros in the United States are along that I-35 corridor that are outside the city limits. Mm-hmm. So I think that speaks to what's driving this statistic.
Yeah. So the number of new listings here can obviously change more significantly than within the city, where a big portion of the city is already developed out. Here, there's a lot more land to
Right.
develop.
We start to see this jump into a 25% month over month, 20% year over year. Combine that with the days on market. Now you're looking at a couple of red flags, and that's when we start to see trends, and we'll change our forecast accordingly if those numbers present themselves to us.
And then the sales price to list price ratio, the market sentiment, you can see it didn't go as high as it did within the city, and it's up a little bit just like within the city from February to March.
It's been creeping up less than 1% month over month for the past couple of months. So just steady and slowly moving in the right direction.
I think for both buyers and sellers, this is one of the toughest markets to navigate because it's changing so quickly, with interest rates changing on a weekly basis sometimes, everything going on in the macro market, seasonality, local things that are happening, and it is so hyper local that it's really the time where you need a professional the most to be able to check in and say, okay, I want to sell what's going on in the broader market and what's going on in my hyper local market that's going to impact me, and how do we go about coming up with a strategy for selling my home? And as a buyer, what other strategies can we employ? Is it really low inventory? Do we have to start pursuing some off-market stuff, which we've had success with? Or is it an area where there's a lot of opportunities? We can get really aggressive on negotiating and on offers. And there's everything in between. So I think really being in touch, reach out. There's a link in the description below so we can chat with you more about what the strategy should be for you. Love to chat with you. Shoot us a text, email, whatever works best for you. We'd love to chat. If you got a lot out of this video on residential real estate, we also do commercial. Check out this video where we update you on the commercial market. I'm David Shapiro with the Shapiro Group. Thanks for joining me and my colleague Lee Abraham on this month's Market Update.
Thanks, everybody.